afternoon, good morning, or good evening, depending on where you are in the world. And welcome to this webinar, Sustainable Finance, Shipping and Technology. I'm Marcus Hand, editor of Seatrade Maritime News, and I'll be your moderator for today. And before we get underway with today's discussions, I just have a few short announcements. This webinar is designed to be interactive. The dock of widgets will allow you to learn about today's speakers, download resources, share this webinar via social media outlets, and participate in the Q&A session that takes place later in the presentation. Lastly, if you're experiencing any technical problems or difficulties, please click the Help widget found on your screen or type into the Q&A area, and we will be glad to offer you one-on-one assistance. Now, on to the main topic of today's webinar, which is brought to you by the Hong Kong Maritime and Port Board and Seatrade Maritime News. For the next hour or so, we are going to be taking an in-depth look at the types of sustainable finance available to shipping and the technologies that this finance funds. With the decarbonisation ambitions for shipping in 2030 and 2050, and the introduction of near-term measures such as EEXI and the Carbon Intensity Index, companies need to finance their pathway to green and sustainable shipping and low to zero carbon operations. Hong Kong has long been a financing hub for shipping in Asia, and with the rapid growth in sustainable financing, has a key role to play in green financing for the maritime industries. Hong Kong's strong links to mainland China and its shipbuilding and ship repair industries underscore this, in particular for shipping. Globally, we have seen initiatives such as the Poseidon Principles, putting green and sustainable finance firmly at the top of the agenda. In this webinar, we will examine the types of sustainable financing available to shipping and how these apply to both retrofits and new buildings. We will also discuss the technologies available to shipping in its decarbonisation journey. I am delighted to introduce our expert panel, who will be sharing their insights into today's topic. Firstly, Logan Chong, Managing Director and Head of Shipping and Offshore Greater China for BNP Paribas. Welcome, Logan. And then we have Dr. Jan-Henrik Hübner, Global Head of Shipping Advisory for DNV Maritime. Tuomas Riski, CEO and Partner for Norse Power. And Jean Sullivan, Lead Infrastructure Banker for the International Finance Corporation, IFC. To start off this discussion, I'm going to be asking each panelist an opening question in turn, and then we'll move to a Q&A session with the audience. So while you're listening to their answers, I'm sure you're going to get questions coming up. So please send in your questions on the system so we can get the Q&A right up and running straight after the opening questions. To start the panel session, I'd first like to turn to Logan from BNP Paribas. Logan, could you tell the audience a bit about the sustainable finance projects available for shipping and how important it is that a new project is green and sustainable from BNP Paribas' perspective? Logan, please.
Yeah, thank you, Marcus, and good afternoon and good morning in the other part of the world, or good evening, as Marcus said. Yeah, sustainability financing and green financing, yeah, definitely nowadays is very important for our society and our environment. So for BNP, we very much promote green shipping and sustainability financing. Yeah, in fact, we got an ocean paper that promote to have more the green element for ocean. So right now, actually, for green or sustainability financing, we have mainly two labels. One is green label, one is transition label. So for green label, which means the financing that is definitely classified as green, but if the project itself is not qualified to be green, that is in transition, then we could grant a transition label. I'll give you an example that people think about LNG, that probably is a better fuel, but LNG is also having the carbon. So it's not a final solution. So that's why we are more conservative. If ship having LNG fuel as the fuel for the engine, right now we probably can offer transition label rather than green. So, and how important for our bank to look at the sustainability financing? Obviously, right now, we need to look at not just a credit issue. Of course, another important matter is compliance issue. We also need to look at a CSR issue. So CSR, definitely also include the environment. So if our client, they can look at the sustainability financing angle, that will very much give a higher score in the aspect of CSR. So that is very important. So I think I may stop it here.
Thank you, Logan. It's quite interesting how you break that down with the green and in transition labels and how it contributes to a company's CSR. I'm sure we're going to come back to some of this later in the webinar. I'd now like to move on to Jan-Henrik from DNV Maritime. Jan-Henrik, we see a lot of different types of financing available: green financing, sustainably linked financing, and so forth. How do these work for different types of vessels?
Yeah, thanks for the question, Marcus. And I think Logan helped me, so to say, played me the ball. We differentiate, as you say, sustainable finance, green, sustainability linked, and transition finance. So I'd like to add the sustainability linked angle to what Logan says. The standards and the way they are applied by the market participants are developing. Some standards are a bit older, a bit more established, others are coming. In green financing, we always look at the asset and the asset's performance, while in sustainability linked and in transition finance, it's more a corporate financing, which may, of course, be used to finance specific assets, but we need to see a commitment from the corporate to decarbonize. In green, there's clear standards on what vessel segments can be in or out. Basically, it's said vessels transport or dedicated to transport fossil fuels are not eligible to green finance, but they can be, by the letter of the law, eligible to sustainability linked and transition finance. I think we heard an example on that also. And there is a question on how market participants interpret that. Because every ship owner says, of course, I have the greenest vessel of all, but some banks and investors made bad experience and saw some problematic cases in the past, which raised activist concerns talking about greenwashing. And nobody wants that. Hence, there's external, let's say, verification needed to take a close look how green or ambitious the vessel or the commitment of the corporate actually is. By the way, I forgot saying we're talking about new builds, but also retrofits can be financed in a sustainable way. This position of taking an external view on this is done by organizations like DNV, for example, where the business area Maritime, of course, we are in the details of the vessels or of the maritime aspects, of the regulation and so on, technical aspects, while the colleagues from assurance are globally one of the biggest verifiers or providers of second-party opinions. So that works very well. I've also done that, for example, with BNP and so on in a few cases, or in a number of cases in the past. And Markus, you said which vessel segments in, out, and something. There's, of course, clear cases. As I said, green, it's pretty defined. Sustainability linked and transition is a bit more to the interpretation of the market participants. I'd say 2/3 of the cases we get, or 2/3 of the inquiries we get, are pretty clear cases, and 1/3 is possibly borderline, where we really need to take a close look. Can this be eligible or can this not be eligible? I think in this introduction statement, we would have not enough time to discuss all the borderline cases, but happy to pick that up again when we come to the Q&A later on. Yeah. I think that's good for now, and happy to have more detailed questions on that, Markus, later.
Thank you, Jan-Henrik. Yes, I'm sure we're not going to come back to some of those more detailed questions later in the webinar. And yeah, I think there was quite an obvious follow-on from what you were saying from Logan in his answer as well. I'm going to switch gears a little bit now and turn to Tuomas, who's from Norsepower, who are a manufacturer of rotor sails, which obviously help reduce emissions. Looking at a slightly broader level than just rotor sails, Tuomas, how much of a role do different technologies, including sails, lubrication, air lubrication, digital solutions, have to play in meeting shipping's decarbonization goals?
Thanks for the good question, Markus, and good afternoon and morning to everybody. We at Norsepower, we have so far fitted 7 different ships within total 14 rotor sails, and these cases have been externally verified so that we can actually prove the emissions reductions and fuel savings. And based on these externally verified results, we have made an analysis of how much we could reduce the total carbon emissions of global fleet with our rotor sails alone. And the answer of that analysis, it was about 80 megatons. As we know, the total emissions of global shipping are roughly 1 gigaton. So with our technology alone, we could reduce the global emissions by retrofitting rotor sails with roughly 8%. Of course, this is not the only retrofitable technology in the world. My personal estimation is that if we would make these efficient and proven retrofits, which we have today available, we could reduce the global emissions of shipping roughly with 20% without compromising the service speed. So I hope that we could go to this direction by combining different technologies. We all see that fuel is becoming more and more expensive all the time, especially those long-term fuels like hydrogen, ammonia, and methanol. They will be heavily expensive. So I think that it would be also an excellent investment to make these retrofits. Minimizing the fuel consumption, it's the key for the decarbonization, and we can do it already today. So that's my take in brief.
Thank you, Tuomas. That's a very interesting figure, that sort of 20%. That would make a very significant inroad into shipping's, certainly short-term to 2030 decarbonisation ambitions. So come back to some of that again later in this webinar. Now I'd like to turn to Jean from the International Finance Corporation, looking at this from a sort of a much bigger perspective, really. Jean, what role can the IFC and the World Bank play in helping shipping and maritime in the finance of its decarbonisation ambitions?
Thanks, Marcus, and good day, everyone. So perhaps I'll just briefly introduce the IFC for people who are not familiar. So the IFC is a part of the World Bank Group, and we're the largest global development finance institution focused on the private sector. We're AAA rated, and we have about 100 billion US in assets. Historically, IFC has not been a big player in ship finance. The view we've had is that the international banks have taken care of the market quite well, and there hasn't been a need for us to engage. Why we are engaging now is really around this decarbonization story. where the emerging markets have a role to play, and there's a need to partner with the shipping industry to make that happen. Where we have historically been more involved is in domestic shipping in emerging markets, seaport infrastructure, and inland logistics infrastructure. In terms of the role that we can play, I'll talk about two areas. So first, and I want to kind of pick up on Tuomas's point and talk about efficiency in terms of things that could be done with existing technology and assets, and then talk about the new technologies and new fuels and the role that IFC can play across each of these. So on the first point, existing technologies, if we look at things like domestic shipping or short-haul shipping, very often shipping is competing with trucking, and trucking has a heavier greenhouse gas footprint than shipping. So this is an area where if we talk about the end-to-end supply chains that we're trying to decarbonize, there's a role that shipping is already playing today and has been historically playing in decarbonizing those supply chains, and we'd really like to encourage more of that. In the Pearl River Delta region, this is a hub for domestic shipping in China, and it is also a place that's well positioned around the growing integration of supply chains between China and Vietnam. There's a lot of truck traffic between the two countries currently, and it's very interesting to look at how much of that can be shipped over to shipping with a lower greenhouse gas footprint. And I'm pleased to share that in September of this year, we signed a $100 million loan with a Chinese shipping company, really with that specific target in mind of displacing trucking on some of the domestic routes in China. So that's a theme that we'd like to see more of, again, working just with existing technologies and increasing the efficiency of global supply chains from a greenhouse gas viewpoint perspective. Now, let me just talk about the new technologies and fuels, and I'll focus on the fuels. And here in the industry, we hear a lot about the chicken and egg problem. So how do we get everything in place? And if we look at the way the industry has run for many years, we have the petroleum-based fuels where the supply chain is in place, and it's something that we frankly take for granted. But as we look at some of these new fuels, there is work to be done to get those in place. And so the role that we're looking to play here as a development bank is to partner with industry, partner with local governments and port authorities around things like policies, regulations, safety standards to set the groundwork for those new fuels to be brought in and made available to the shipping industry. And then as those foundational pieces are put in place, you can then look to the IFC to be deploying capital to bring those new assets online so those new fuel supply chains can get up and running. Again, always with a focus on the developing countries.
Thank you, Gene. Yes, and a very important piece of the puzzle there, actually, the infrastructure that's going to bring this fuel to the ships, and in many senses is actually the most expensive component of all of this. I've seen figures putting it as, I think, as much as 80% of the actual total decarbonization costs for shipping. Right. Thank you all the panelists for answers to those opening questions. Now we've heard from all our panelists, it's time to move to the question and answer portion of the event. Pleased to see we've got some questions coming in from the audience. As a reminder, just participate in the Q&A. Just type your question into the text box located on the presentation window, or click the Q&A icon on your screen. If we're unable to answer all questions that are submitted today during the webinar, we will be sure to share them with our speakers who can reply to you offline. I'm going to go straight to a question for the audience. I think I'm going to put this to Tuomas to start off with and then see who else wants to answer this. I sort of see it relevant to Tuomas, who's come from a company that's a technology startup. And that, this question is, shipping needs to be innovative. Who is funding the new technology startups? Is it, as traditional funders seem to only fund the assets, so who is funding businesses like yourselves, Tuomas?
Thanks. Very good question. When this company was launched 10 years ago, back in 2012, it was actually the venture capital sector who is traditionally financing these disruptive startups, who gave us the seed money to start running the company. Later on, when we have progressed with the technology and it has become externally verified and more mature, we have also started to receive investments from the industry itself. Our last financing round took place in 2019, and at that time, the so-called climate fund of the oil majors, meaning Shell, Equinor, Total, and so on, their climate fund was the lead investor behind Norse Power. So today we have these oil companies as our shareholders. We are actually expecting to close our next financing round within about 6 months from today, and it seems to me that now we will start to receive investments from the shipping industry. So this is how it goes. It starts with venture capital, disruptive financing bodies, and when you get beyond certain thresholds, then you start to receive investments from the actual industry.
Okay, quite interesting. You've got oil companies investing in your technology, actually. I don't know if any of the other panelists...
That's correct, yeah. Yeah, so they are of course shipping a lot of their products with ships, so they see that there's a good way to reduce the carbon footprint of these oil product shipping. So that's why they invested in the company.
So very interesting. I don't know if any of the other panelists would like to address the question.
Marcus will make a similar experience. Yeah, Marcus will make a similar experience because number of venture capital providers also coming from the oil and gas industry ask us about due diligences on markets or technologies or something related to these new technologies. I mean, many of the retrofit technologies are proven since quite a number of years. I mean, think of the hydrodynamics and so on, like propulsion improving devices and so on. But these, let's say, more innovative ones, which have less cases or less cases where they can demonstrate, but still they find good number of financiers. I think we are frequently asked by potential providers, don't you know some great potential startups active in decarbonizing and shipping, whom you could direct us to? I mean, that's not our primary role, of course, but still people come here. We see quite an interest in investing there.
Okay, well, it's really interesting to get that perspective of who's investing in these technologies. I'd like to come back to more, I guess, the traditional financing part, and just look at what come to Logan. Now, you talked us through how the bank views financing in different sort of levels in terms of green and sustainability. Just want to ask you, what's the benefits to a ship owner of green and sustainable finance versus like traditional loan finance that we've seen for decades in shipping? Logan.
Yeah, thank you, Marcus. Yeah, what are the benefits? Yeah, well, the obvious benefits is that you would contribute your effort to improve the environment. That's very important. Yeah, and so as I previously mentioned, is CSR that our client that can show they have the responsibility for the society. So this is that shows their commitment to improve the environment. That is you can say that is intangible benefit. And for tangible benefit, in fact, that will improve our clients in our band internal recognition to our clients that the client is a quality client that have a good heart to the society. That is also the intangible score. And the economic benefit is we, as you mentioned, and also Jane also mentioned that we do have a sustainability-linked loan. So sustainability-linked loan is if our client can meet a certain KPI, then the interest margin would be reduced for certain basis point. That will help to reduce the interest of the loan. That is the economic benefit. But on the other hand, the sustainability-linked loan, if the client cannot meet the standard, and in fact achieve a lower standard, there will be a punishment that will increase the interest margin. So the client have to make sure that they are really committed to achieve certain criteria, certain KPI, and also they have the plan to do it. Then they could apply for sustainability-linked loan, and we will set up KPIs, normally 2 KPIs, and we also likely that we will also need to get a second party opinion. As I said earlier, we are quite conservative, and you also mentioned about people would like to have a greenwashing, so definitely we will try to avoid that, and that's why we need to have a second party opinion to make sure that this is not our own opinion. It's also have a third party opinion that can validate. Yeah. So I think I stop here. Yeah.
Thank you, Logan. I think this is very important, that point you made at the end there, that validating and ensuring that against sort of greenwashing. Actually, I think just ask Jan-Henrik, coming from the DMV advisory side, is this something that you're involved in terms of validating whether projects are actually green?
Yeah, absolutely. That's something which is I would assume in 70% or something of all sustainable transactions, the financiers will ask for a second party opinion. I think in all cases of bonds, because then you have a high number of participants. I would say in case of bonds, it's always, in a case of loans, it's probably 70%. And we differentiate, again, as green and sustainability linked and so on. For green, you need to demonstrate upfront before the loan is given if the vessel will be good enough to meet certain criteria. That's tested basically once. And there, in most cases, no, let's say, ongoing or repetitive verification is required. But in case of sustainability-linked transactions, it's not only needed to do that before, but also each year to see if the KPI or the so-called sustainable performance target, which the borrower has committed to meet, is actually met, and that then decides which interest rate is to be paid. So that's something which we are doing very regularly, and that's common in the market. Yeah.
Okay, thanks for explaining how that process works, Jan-Henrik. Looking at questions here from the audience, we've got something very specifically for Jean from IFC. The person is asking how the IFC will work with the goals of developed countries on maritime decarbonization initiatives. They say they understand the mandate of the IFC is somewhat limited, but shipping is a global sector, so you can't sort of break it down into developing and developed countries. So, Gina, I don't know if you can help address that question.
Sure. Well, thanks for the question. I think one of the interesting developments we've seen in 2022 is the announcement of these green shipping corridors. So Shanghai, LA, Singapore, Rotterdam, and our expectation is that that these green shipping corridors can help the industry to get started. by focusing the attention on where we need to get these supply chains for the fuels up and running. And so as these routes are set up, what we are seeing is a pattern that they cross different parts of the world, and they also bridge between more developed parts of the world and less developed parts of the world. So in those green shipping corridors, we are keen to identify ways where IFC can be assisting at the developed country end of the spectrum. So that is one example. Another example is on some of the new fuels that are under consideration, methanol, ammonia, hydrogen. The production basis for these fuels is a function of natural resources, so the strength of wind and solar resources in different parts of the world. And if you look at the places that have the strongest, most favorable wind and solar resources, a number of those parts of the world are developing countries. So that's another example where IFC can be supporting from the developing country side of the partnership around the production of more cost competitive green fuels that can be fed into the global shipping industry.
Thank you, Gene. It's interesting to see that broader picture there of and with the new fuels. I'm going to come back to Jan-Henrik with another question here from the audience, which is the importance of medium to long-term charter cover for ship owners who wish to access sustainable or green finance. Just how important is it to have that charter cover to back this up?
Yeah, absolutely. I mean, we experience in many discussions with ship owners that it's easier for those who are, let's say, owning the vessel and operating it, paying the fuel bill. So that's obvious because you one-to-one benefit from the savings the implementation of the technology yields. But the pure tonnage providers have a disadvantage there because maybe of the savings the investments generate, they only reward 50% or something. I mean, it's somehow shared typically between the operator and the owner. I think that will become even more important, of course, not only in the context of sustainable finance, but also with the CII regulation, with the EU ETS. I mean, it's on the EU ETS, it's basically the charterer responsible to pay. For the CII, it's the owner responsible to be compliant. So there's let's say, different advantages in the power play depending on the regulation. But of course, I can just strongly encourage every tonnage provider to get in very close discussion with his charterer and try to, and we see that also on the market. We see that a lot actually in the market. People approaching their charterer saying, can we secure a long-term charter at a certain rate, which helps me to invest in a technology, which helps you to save money? Apparently, I mean, this depends on where we stand in the market. Yeah, I mean, in the container market, for example, which has been great over the last 2 years, it wasn't too difficult, I think, for a tonnage provider to say, you get my vessel, but we need to talk also about who is paying for what. That changes over time depending on how hot the market is. But it's super important because if we only have one paying and the other benefiting, of course, it doesn't work.
Yeah, so a very important factor then from your perspective.
Absolutely.
Logan, do you have a perspective on that from BNP?
Yeah. Well, yeah, and yes, as Henry said, that if it's just a tonnage provider, and it is basically rely on the charterer to operate the vessels. So the charter party contract is very important, and this has to be carefully designed. Yeah.
Thank you.
May I comment this from a technology provider perspective? It's an interesting question. So today, when we provide rotor sails, we see a lot of deals actually being made so that the charterer and the owner of the ship find an agreement how to in a way pay the investment by increasing the charter rate. But of course, it needs to be quite a long-term charter deal to enable financing the entire investment. But so typically it goes so that the owner is not able to finance the entire investment through the original charter agreement. But then when I look at the owner's perspective, I have to think about what kind of asset do they have in the hand when that original charter agreement is ending. And if they have invested in this kind of sustainable technologies, they have highly energy efficient ship in hand. The asset value is maximized, and I think they have a fairly good chance to find the best possible charter deal for the next period. So this is how I see the market works, even if the first agreement doesn't always enable financing the entire investment. But it makes a lot of sense for all parties to make it like this.
Yeah, that's actually interesting to get that perspective from the technology provider. And I'd actually just like to stay with you, Tuomas. One of the things I've noticed with technologies such as that by Norse Power, we seem to see them sort of on like one ship here, one ship there, owners trialing them out. What's the barriers do you need to overcome to enable operators to implement new technologies such as rotor sails fleet-wide rather than just vessel by vessel?
Yeah, very good question. As I mentioned already, we have so far fitted 7 ships with our technology. Today we have 5 more ships under delivery. So we can see that it's starting to spread quite fast and the market is really accelerating. As we all know, it's a conservative market. So before making the investment decisions, at first the owners want to be convinced that it works. I think now we have the evidence on the market, so now that's happening. But they still have a kind of trend that they start with 1 or 2 ships, they test it themselves. And it seems to me that then they are ready to go fleet-wide. So I actually expect that we can start to have these kind of fleet-wide agreements and deliveries quite soon, because we have a proven track record of the technology and happy customers with it. So it just takes time, but I can really see that it's starting to happen.
Okay, that's good to hear. Jan-Henrik?
Yeah, I think there's 2 things coming together. I mean, one is obviously the market and the economics there, and the other is the regulation. And until recently, the regulation has not really pushed, for example, for installing more retrofit devices and, for example, investing in rotor sails. But with CII clear to be tightening over time, with also Poseidon principles tightening over time, with banking committed to a net zero banking alliance over time, and so on. Everybody knows now, and people become more aware. These regulations, these needs for decarbonization will actually come. We need to do something which is, besides the pure economics, a good starting point. Regarding wind, I think we are at this point where it will kick off. I mean, not only in retrofits, but also in new builds.
Okay. It's going to be interesting to see how that happens. And the idea of fleet-wide projects, that's certainly going to give myself a lot more to write about than just these single sort of projects that we've been seeing till now. Kind of following on from this, I'd like to come back to Logan for a minute. Because we were talking about retrofit finance here quite a bit. I mean, there's also for new buildings. But I'd just like to ask Logan, how easy is it to access sustainable finance products for retrofit projects? Like, for example, putting rotor sails on an existing ship.
Yeah, thank you, Marcus. Well, retrofit project, we are very much welcome, because you know, for the existing vessel, if they need to meeting the target, IMO target, or Poseidon principle trajectory, somehow the owner they need to do something, and for the existing vessels, so that apart from that maybe can improve the efficiency of the engines, or that to recalibrate the engine or adding some equipment. So in a sense, that is all the kind of a retrofit that very much our clients, ship owner, they need to do it. So it's not just looking at new building project. Of course, new building projects, they can have a better design and already have the new equipment on board. But for existing vessel, definitely our ship owners client, they need to retrofit their existing fleet. So this is very much we encourage our client to do it. So for the retrofit course, that can it depends whether the performance result will be ahead of, for example, Poseidon principal trajectory. That probably we may be able to give a better label, maybe a green label. So it also depend on the Jan-Henrik whether he can give a second party opinion to validate that. So so that's why to get financing for retrofit equipment and project, this is something it's quite normal. It's nothing unusual. Yeah.
Okay, it's good to hear that it's a normal part of the process.
Yeah.
Obviously, it's always easier if you come with a fleet and say, okay, I want to do something on 20 vessels than on one vessel. Yeah, for one vessel, it may be not super interesting for a bank, but if it's sizable, which we see now, I mean, see how many people order new propellers or order propulsion improving devices or something. Once there's sizable packages, that gets really interesting for everybody, I think.
So that obviously makes sense if it's a much bigger package of deals, and that sort of speaks to what Tuomas was saying before about actually getting fleet-wide deals. I'm just going to stay with you, Jan-Henrik. This whole, obviously we've got two sort of factors here. One will be the new fuels, and the other one is just overall reducing emissions. The new fuels we're going to have are probably going to be less energy dense and so forth. So how important is it just to actually reduce fuel consumption, through all these different types of projects we've just been talking about?
Yeah, I mean, saving fuel is obviously the cheapest way to save CO2. I'd say on average across segments, on ages, whatever. I mean, there's differences, of course, but on average, technical and operational savings measures can yield about 20% CO2 savings at negative abatement cost, meaning that that implementation of these measures will pay off over the remaining lifetime of the vessel. This will apply also to many wind turbines, for example, which Tuomas would supply, but also think of the propellers, which I mentioned, propulsion improving devices, variable frequency drives for your cooling water pump, and so on, LED lights. I mean, there's 10 more examples, and all these things on average have negative abatement cost in a total cost perspective. Of course, you still have the owner versus operator topic where costs will be shared and so on, but still that's great because this in the end comes for free. Of course, it has some capex in the beginning, but you earn this money back. In addition, speed is obviously a big lever. I mean, if you reduce your average speed by 10%, you probably reduce your fuel consumption per nautical mile by like 18, 19, 20% order of magnitude. And markets will, of course, adapt to this. I mean, vessels will just be sailing slower end of 2030s compared to end of 2020s, something. And with that, you can achieve a lot. And beyond that, to close the gaps towards the future CII regulation, towards the future Poseidon, and so on, alternative fuels will be needed. And yes, there's challenges with them. Everyone has a bit different challenges. And it's of course easier to predict what may be a winner in the mid 2040s than saying what the way from now to there will be. But just to re-emphasize, fuel-saving measures, technical as well as operational, can yield a lot and typically have good negative abatement cost.
Okay, so there's a very good case for the fuel-saving measures, the technical. Tuomas, would you like to give your opinion on this?
Yeah, thanks. My pleasure. Nice to hear that DNV agrees on this negative CO2 abatement cost. I truly see that, especially if you fit a ship which has a long lifespan ahead with rotor sails or other similar technology, you will get your money back, and it will be a great investment. Actually, world has changed quite a lot after Norsepower was founded. When we started this back in 2012, there was only fuel price-based payback available. That was the only thing how the owners talked about. How do I ever get my money back on this rotor sail or similar clean tech investment? But when I look at the market today, of course, that fuel price-based payback is still there, with record high energy prices and with those coming all the time higher, especially with these new future fuels. But I also see three other trends influencing the payback. Everybody sees that carbon emissions trading or carbon levy or something like that is coming on the market. Everybody's already discounting the carbon price. It's making the cases better. Then we have these environmental indexes, EEDI, EEXI, and CII. There's kind of compliance-based demand. Ship owners need to do something so that they can continue using the same ship. This is also making better ROI on any investments. And point number 4, I see ESG drivers on the market. A lot of companies want to be sustainable. They want to show that they are sustainable, and that's also driving these investments. So I think for these retrofittable clean technologies, it's today a better market than ever, and we are really expecting a high growth.
Okay. As I said before, it's going to be interesting to see what sort of projects people put forward. And yes, as we bring in things like carbon pricing and other factors into this whole equation. I'm going to turn now to the other side of this, which is actually the new fuels. I'm going to ask Jean this question. It's, obviously new fuels are going to play a role. They're at a fairly nascent stage at the moment. But how is the supply chain for those new fuels going to get built? What will it need? And how are we at that, with that so far? Jean.
Thanks, Marcus. So in short, it's very early days in getting those supply chains up and running. And it is going to take time. But there are a couple of key things that I think we could look at. So first is what I mentioned earlier was the announcement of these green shipping corridors. And perhaps before long, we'll have more clear kind of global guidance from the IMO as well. But the green shipping corridors, I think, are helpful because if we look at what needs to happen and we start with the upstream production, at the upstream production side, technology is not an issue. Actually, it's proven technology in general. It's just applying that technology at a scale that hasn't been applied before. And so some of these investments that will be happening in upstream production, in order to get scale economies, you're talking about fairly large investments. So you could have X billion-dollar projects to produce different types of hydrogen-based molecules for the shipping industry. So in order for people to be deploying capital of that kind of scale, what they're looking for is large, clearly defined markets where they're going to be selling those fuels into. And so I think these green shipping corridors are quite helpful because it focuses the attention on where those pockets of demand will first kind of coalesce. So that's a positive development. And the second thing that I think is worth touching on is the commercial aspect of these relationships. So the upstream producers, as people in the shipping industry are probably aware, these upstream producers are looking for 10 and 20-year offtake agreements for these fuels. And this is something that ship owners, shipping executives are not in the habit of doing. The industry does not enter long-term fuel procurement contracts. And so we have really a fundamental disconnect between the people that are looking to supply the industry these fuels and the industry. I think we're actually quite a long way away from these fuels being commoditized. If we look at the history of LNG, it took decades for LNG to commoditize. So if it's not commoditized, there aren't spot markets for these commodities, you're going to have some kind of a long-term contractual relationship to get these large-scale production facilities up and running. So the question is, who's going to be standing in the middle between the shipping companies and the producers? I think this is a really important piece of the puzzle. The major energy companies were mentioned earlier. This is possibly a place that they can be playing a role. They have strong credit ratings generally to back up those kind of arrangements. I think we may also see some government agencies stepping in and saying, okay, this is a place where it's a market creation situation. We cannot expect the shipping industry to be wearing this risk, so we're going to step in as a government agency and help to anchor some offtake, either directly as a government entity or through state-owned enterprises owned by governments. And then the last piece I would say is not oil majors, but other types of large corporations that have strong credit ratings and are familiar with the value chain or are familiar with the shipping industry. I think we may see some of them stepping in and say, okay, we're prepared to play some kind of a role in intermediating. So that's not going to be easy, that piece of the puzzle, but it's an important piece. And I think it's as we see that piece coming together, or I say those two pieces, the green shipping corridors where people can focus their efforts on where we're supplying the fuels into, and we can be clear on who is prepared to enter a long-term contract for these fuels and has the credit rating and balance sheet strength to underpin that. I think when those two pieces are coming together, that's when you're going to start seeing the investment flowing and the projects start happening. And since this is the Hong Kong Maritime Week, I'd like to just offer for people based in Hong Kong that we have majors in Hong Kong. We have large corporations that are creditworthy, that are familiar with the shipping industry. And we also have some fairly creditworthy government agencies that are also familiar with the shipping industry. So the building blocks in Hong Kong are available to solve that equation. And I think it'll be very interesting to see how that plays out over the coming years.
That's interesting how you're sort of trying to bridge that gap. And when you mentioned sort of 10 to 20-year offtake deals, I could not see a traditional ship owner getting into that sort of thing. So it's quite interesting how you're looking to bridge that gap.
Very few ones, Marcus, at least. Marcus, very few ones at least, but we see some. I mean, a French liner company bought stakes in a producer of synthetic LNG. We are currently discussing with somebody a bunkering strategy for dual fuel vessels of certain type. And also on the plate is a make or buy decisions. Shall we buy the fuel on the market or shall we buy a producer of these fuels? So there's few companies who are willing to take that, but surely not the majority in shipping, no.
I guess the biggest with the deepest pockets, perhaps. It sounds like some. I mean, certainly the French company you mentioned, for example, is a large name. I just actually want to come back to Gina. There's just a question from the audience. I'm not sure if this is something you're involved in, but the question came and it relates to the new fuels. Is the IFC supporting the developments of standards and requirements related to the safe transport and bunkering of new fuels? And in particular, the question related to ammonia. Gina, I'm not sure if that's something IFC is involved in.
So to my knowledge, we're not involved in setting industry-level standards, but something that I would say would be consistent with our mandate, and we're very happy to get involved in, is around, again, in the developing countries, around how industry can work with government to put these building blocks in place around what are the standards that are going to be applied for bunkering in a particular port or series of ports in a country.
Okay. I don't know, Jan-Henrik, do you have a view from DNV on that?
Yeah, I mean, sure. Whenever new fuels come, they need to be tested, and the bunkering needs to be tested, and safety needs to be safeguarded, and so on. That's a typical role of class, obviously, to be involved in that. We did that on LNG, 10 plus years ago. And I remember well on how many hazards and so on we participated when it was about LNG bunkering. But yes, I mean, now it's about the more advanced alternative fuels, including ammonia down to hydrogen even. So yeah, that's something for sure classes are involved in.
Okay, so it's involved broadly from class society, and I know that this has been worked on by lots of different countries and also at an international level, and certainly something like ammonia does have some definite safety, potential safety problems. We are very much coming close to the hour mark here, so I'm actually going. I've not really got enough time for any more questions, so we're going to wrap this up now. We've covered an awful lot of ground in this. We've gone sort of like the different types of financing, what's available, how this is assessed, ensuring that that there's not greenwashing. We've looked at different types of retrofits and retrofit finance, and the whole supply chain infrastructure. So we've got an awful lot of ground we managed to cover over about the last hour or so. We've got, I think there's the odd question that hasn't come in for the audience. I will pass these on to the speakers to answer after the event. With that, I'd really like to just thank our guests so much today for taking part of this webinar as part of Hong Kong Maritime Week. Thank you, Logan Chong, Dr. Jan-Henrik Hübner, Tuomas Riski, and Jean Sullivan. Thank you so much for your time and expertise today. And as well,
a pleasure. Thanks a lot.
Thank you.
Thank you.
And as well, I'd just like to thank everybody in the audience. We really appreciate your attention, your participation, questions, some fantastic questions there. Just to let you know, within the next 24 hours, you'll receive a personalized follow-up email with details and a link from today's presentation on demand. Please feel free to invite your colleagues and peers who may not have been available to watch and listen to this event. It will be available for playback. With that, on behalf of the Hong Kong Maritime and Port Board and Seatrade Maritime News, I'd like to thank you for joining us today on this webinar that's part of Hong Kong Maritime Week. Thank you, everybody, for your time.